Yes, absolutely. I mean, look, great companies, Sarah, invest. I think the mark of great companies is that they know when to invest and really look at the long term versus the short term. Most of the companies I cover, the legacy media companies, are really focused on near-term earnings maximization and are never willing to sacrifice the short term for the long term. What Facebook is telling you is, look, we need to get people to a more engaging platform. We need to get people from the feed into stories. They've seen on Instagram, as you move from the Instagram feed to Instagram stories, you spend more time. There's less advertising right now on stories, but there's far more time spent per person. And so they're purposefully driving you from less ad-based platforms, from heavier ad-based platforms to less ad-based platforms. But the goal is to increase engagement overall, which is great for the long-term Facebook story and makes this a good buying opportunity tonight.
Rich, reading through all your notes over the last 24 hours, even when the numbers hit and we fell 8%, you were already thinking this is a great buying opportunity. So what happened on the call that then let it down 20% that doesn't concern you but does concern everyone else?
Look, what is happening here is people are trying to figure out what's actually going on. You know, the reason why the stock sold off is that the slowdown in Q3, pretty much expected. I mean, I've talked to investors today. Q3 may even come in a little bit better than what they were forecasting. I think it's really Q4 and projecting that forward where people are really nervous. And it's really this changeover. People are trying to understand what's driving it. It's not data privacy. This is not a GDPR problem. It's not like Facebook's changes that they're making to give you greater privacy controls. As Cheryl said last night, the vast majority of people are opting in to Facebook targeting ads and giving them a better experience. This is really about Facebook proactively trying to push you to stories away from the news feed. And it's that change that's obviously causing the slowdown in revenue growth in the near term. But I think that and Sarah, I realize you don't agree, and that's fine.
No, it's our job to play devil's advocate.
Sure.
And with a stock down 20%, I think you've got a lot of explaining to do.
Absolutely.
Not just on how you missed it.
Look, we don't like screwing up. This is absolutely a screw up, and we don't like screwing up. I mean, we love admitting fault when we've screwed up. The key here, though, and the North Star that viewers watching your show right now should be focusing on is that this is not an ROI problem. This is not a demand. Advertising demand for Facebook is intact. User growth is intact, and advertiser demand.
You didn't explain that.
But user growth in Europe is not intact.
User growth is already regrowing. They mentioned that last night. That user growth has already picked back up in Europe. There's a one-time blip caused by the changes that were made to data privacy in Europe. That's already rebounded, and you're going to see growth in every market except for the U.S. and Canada. But remember, the U.S. and Canada has basically been flat over the last year. But that point on ROI and advertiser demand is critical. Advertisers want to spend on Facebook. This is not a demand problem. This is a supply problem. They are cutting back the supply of advertising as they shift people to stories like they've done on Instagram. As that happens on Facebook, this is really a supply problem, not a demand problem. And that's what gives us confidence.